Hi everyone and welcome back to another live trading series. Today is Friday, January 15th, and due to popular demand, everyone has been asking me on my 5,000 subscribers special how to trade options inside of a TFSA. I'm going to show you what I'm doing. You don't have many options, excuse the pun, for your TFSA. You can only do up to level 2 options, so you can do like a covered call. But if you want to dive deeper into options and do figure out the whole world, you'll have to do it in a margin account. The TFSA and your RSP, it's not meant for you to turn it into business income. It's meant for a retirement. So you're not allowed to trade too much. You're not allowed to day trade, or they might turn it taxable. So I'll show you guys what you have to do first. In Questrade, if you go to account management, click on account management, and then find your tax-free savings account. You see where it says option level? You need to turn this from, I guess it might be off, it might be level 1, but you need to turn this to level 2. This is the most you could do for TFSA, turn this to level 2. Then I'll show you what I do in my TFSA. I basically sell covered calls. You buy 100 shares of a stock and you sell a call against it at a higher price. Let me show you what that looks like. I'll show you all my positions. So if I go strategy, look at all the strategies. I have 5 options. All of them are covered calls. Take a look here. Air Canada, Apple, Corsair, and Inno. So let me just kind of hide all this. Apple, I bought 100 shares at $70. If you look here where it says January 15th, so this expires today. Days to expiration, 0, so expires today at the 140 call. So I have 70 shares and I wrote a contract to sell these shares to someone at 140. They can only exercise this if it's in the money. In the money means if Apple is 140 and above. If we go search for Apple, Apple today is 128.83. So this call is worth a penny, and this is per share. So I'll talk in dollars. So you'll never be able to buy an option for a penny. You have to multiply by 100 because it's 100 shares. You notice how these are grouped together? 100 shares, 1 contract. So what I'm going to do, what you can do in 2 steps, this is called rolling. I'm going to roll this out for 1 month. Why am I doing 1 month? Because that's what I'm comfortable with, and that's where I can earn the most theta. And so I'm not going to do 140 anymore because that's only $12 away. Apple can increase by $12 in a month, so I don't want to do that. I'm going to choose 150. Where can you find out what your choices are? If you go to options, you just find the option chain. You notice all these dates? I didn't choose these dates. These are pre-selected for you. 99% of options expire on Fridays. You have SPY, which expires Monday, Friday, Wednesday. Most of your options will expire Friday. So you just have to choose a Friday. See how this expires today? You notice how you're not getting much money, like say $12 here, $32 here. But if we go out 1 month, you're selling time. This is what options are. This is what, option trading involves, selling time. Notice how everything jumps up. $485, $585. If I were to sell the 140 strike, if Apple goes to 140, I can sell it for $268, but that's too close for me. I don't want to lose my shares. But I think I will be okay if it hits 150, but I'm only earning $127. How I calculate this is my return on the strike. Some people do it as the return on your collateral, but I don't know. There's 2 ways. Like I'm holding 100 shares of Apple at $70, was it? So 7,000. So $127 divided by 7,000, I'm making 1.8%, but $127 divided by 15,000, it's only 0.08. This isn't the best, but I just want to hold on to my Apple shares while getting some passive income in the meantime. So what I'm going to do is roll this. This is not how it is. Let me go custom. So in order to roll, you have to go add a call. What you have to do is buy back the exact one you sold. That's how you close it out. And I'll show you how to find out. And then you want to sell a new one. February 19th, I'm going to sell the 150 strike. See here, this is what it looks like. I have to choose that's weird. Why is it showing up like that? I want to do somewhere between the bid ask 127, I guess. Okay, you'll notice it says buy to close. If you're rolling, make sure if you don't buy back the exact one you sold, that would be called buy to open. You have to make sure it says buy to close. So I'm closing one, I'm opening the other. So this cancels out the one I originally sold. I don't have any more obligation today, and I'm rolling it out. Why do I have to close it out even though it's only worth a penny and I won't be called on it? It's because you can't sell naked options. And if I open another one today, it'll be called, I'll have two calls open, and you're not allowed to sell that. You're not allowed to sell naked options in your TFSA. It's only a margin account. So I am rolling this buy to close, sell to open. I'm making $127. Not bad. And then it should get filled. I'll come back to it. What else am I doing? So that wasn't a good return. I'm only making $100. But what else can I do? I've been trying to sell at the money calls. So what I did with Air Canada, ac.to. Take a look. I bought Air Canada at $22.91. $22.91, and right now it's $23. What strike did I choose? I chose the $23 strike. I did this because I wanted to, I just wanted, I don't mind holding Air Canada for a little bit, but I do also, I'm only doing this, man, I'm jumbling over my words. I just want to sell options in my TFSA on Air Canada, and I don't mind if they get called away. Apple, I want to hold that forever. Air Canada, I just want to earn some options income. Let's take a look at my return. I sold it for $59 a contract at the 23 call. So if we go 59 divided by 23, so that's 2.5%. And I only had this open for, I think it was 10 days. So I made 2.5% for 10 days. But look what I'm going to do. I'm going to roll this to February 19th. I'm rolling it out 30 days. So this is a call. I have 10s because I bought 1,000 shares. So what I'm going to do is go custom add a call. So I have to buy back the exact one I sold. And you'll see that when it says buy to close. I'm rolling it out 1 month. So take a look at the income I'll be getting. So I'll be getting, let's say, $130 per contract. And for 1 month, at the 23 strike, that's 5.6%. So here I'll be making $1,350 by rolling it out. Let's click send. I hope you guys can't hear that. I want you to take, oh look, order filled. Boom, right away. Take a look at this. So I bought Air Canada at $22.91, and if it goes above 23, which it is right now, it's 23.10, I'm forced to sell these if I hold them at 23, and I'm okay with that. If Air Canada goes to $60, I'll miss out on that gain. I'm only doing it for this small turnaround. I'm not here to get the capital appreciation of Air Canada. I'm just here to get the share, the premium. Let's take a look at Inovio. So I bought 1,000 shares at $9.20. Right now it's $10.14. And I did the similar thing with the Air Canada. I sold at the money for $53 a contract. I am losing about like 20 cents on each share here, but I don't mind so much because I'm getting that back. And look, days to expiration 0. It expires today, and I want to roll this. I can hold it to Monday. But you notice how the price is $10.14 and my strike is 9. See here it says in the money, yes. So by the end of the day, I will lose my 1,000 shares. It'll get bought away from me at $9. So someone will pay me $9 for 1,000 shares. I'll get $9,000 back. But I don't, I just want to roll this. So I'll do the same thing again. So I'll go custom, add a call, buy back the exact one you sold, sell new ones. I'm going to go still the $9 strike. So it's weird, isn't it weird that I'm selling $1 less? I'm not bullish on Inovio. I think it'll go down below $9, and I think I might keep these shares. I don't mind missing out on this, $1,000 here, because I do think I don't think it'll go past $10 by February 19th for Inovio. I think it's going to be under 10, but this is the gamble I'm taking. Okay, let's increase this a little bit. Take a look. It says buy to close. I'm closing out my obligation. I'm opening a new one, and I'm making $800 on this. What's my return? One sec. I'm making $80 a contract for a $900. Right? So this is 8.8% just for 1 month. It is risky. I don't recommend people do this. This is a risky stock. This was a penny stock recently. So I'm going to do this. Let me show you what's happening with Afria. I sold a covered call. I bought Afria for $7 and I sold the 13 strike call. Right now it's $16. This means, so it expires today. This means that by the end of the day, I'm forced to sell 100 shares at $13 to someone. They're instantly in the money because it's trading at 16. So I'm kind of losing this $300 gain, but I don't mind because I've been selling covered calls on Afria for a while and I want to be out of the stock. So I don't mind. I'm not going to roll this. I'm letting it expire. I'll show you what it looks like. These 100 shares will be gone. If it's in the money, it's 99.9% guaranteed to get taken away from you. Sorry, this video is running long. I'm just trying to explain to everyone. What are we going to do? I'm going to leave this. This is going to get called away. My last option in my TFSA is Corsair. I sold 2 covered calls for Corsair at 35, 0 days to expiration. I want to roll this to February 19th. I'm going to do the exact same thing I've been doing. Custom, add a call. So I'm going to buy both back. I sold at the 35. Right now, Corsair's trading at 38.60. I don't think it'll go to 40. My target is 35. That's why I keep choosing that. And I'm going 1 month out just because you have no other option. So let's see what we get here. I am making around $300, $600. So let's take a look. Let's say I'm making $3 a contract and my collateral is around 35. So this is another 8.5% return for the month. Chances are, I don't mind if these get called away. I'm selling at the money calls. I bought it. Take a look here. Average price. I bought at $34.97 and I'm selling at 35. So not really making much capital appreciation on the stock. I'm only trading my TFSA for the option income. Let's hope that gets filled. And one thing I have, if you take a look, most of I do have a bunch of cash sitting in my TFSA. I don't know what to do with it yet. I'm waiting for a big red day on most stocks. So I kind of want to jump into ARK. It's at 143 right now. And ARKG, it's at 109. I'm waiting for a big red day so I can buy stocks at a discount and sell more covered calls on them. But yeah, this is what I do on a monthly basis. So I sold the monthly Apple call. So, because I don't want to get this called away, if I just have to keep an eye on Apple, if it approaches 150, I'll just roll it again. I'll do this exact same thing. The further out in time you roll, you can continue getting premium. If Apple goes to 160, 170, you don't have much extrinsic value to get by rolling. You have to manage it before it breaches your strike, in my opinion, at least. So I want to keep my Apple shares. I don't mind if everything else gets called away. Novio, Afria, I want Afria to get called away. Air Canada, I don't mind if everything leaves my hands except Apple. I'm holding it on forever. Sorry for the long video. I hope this makes sense. People kept asking how to invest in options in my TFSA. Just the easiest thing you could do right now, I'm going to say, is if you have 100 shares in your TFSA of a stock, sell an option against it. The second easiest thing you could do is buy 100 shares of a company you don't mind owning and then sell a call against it. You could do something cheap like Air Canada. This is a little risky because, airlines aren't doing well in the pandemic, but if you want to do weekly, let's try to find Air Canada. Come on. Air Canada, it has weekly. So right now, today's January 15th. Look, it has options expiring every Friday. You can do a weekly test if you want. You can buy shares at $23 and sell a covered call for 7 days at $23. Let me know if you have any questions. I've been getting a lot of messages from people, so thanks for reaching out. I'll try to answer all your questions. This is investing in your TFSA, pretty straightforward, not complicated. You can't do strangles, you can't do anything naked, which is good because you don't want to lose money in your TFSA. But ask me any questions you have. Thanks for watching.